Hey everyone, this is Ryan Mallory for SharePlanner.com, and time to do another midday trading video here, and got a number of stocks to go over here, and these stocks are coming from our Splash Zone, which is a paid-for newsletter that a number of subscribers are a part of for day trading and swing trading. But in any case, these stocks come from them and their questions about various trade setups, etc. And what I want to do is cover all these stocks that they are looking at, and the first one is going to be the S&P in general. So what we're seeing out of here today, and I've talked a lot about this already in the trading plan, so I won't reiterate a lot of that, but if you see here on this 5-minute chart, you have a bull flag working. So when we started the day off, we dipped a little bit lower, and then since then we've just been steadily climbing higher. It's not really a perfect trend line per se, but it's just about as good of a trend line you're going to find on the 5-minute chart. In fact, you could probably say that it is trading within a well-defined channel right there. So you got that to be cognizant of, and I see this basically unfolding on as a day that just steadily marches higher. It's going to have your pullbacks, your sideways consolidations, and then a burst higher, followed by another pullback or consolidation. But this is looking really good on just on the 5-minute chart here. I think the market looks very healthy. You got a little bit of a bull flag working here right now that this market is trying to break out of. In fact, you could probably say that it's kind of sort of doing that right now as we speak, breaking out of that bull flag with this latest 5-minute chart. So I would expect it to march a few points higher here at the least in the near term. Or at least that's what my experience with the market has been when you're getting that particular kind of market action. So that's the 5-minute chart. That's going to bode well for the daily chart and what kind of candle we get today. And the other thing that we talked about was this bull flag that was forming last week in the market. We broke out of it on Friday, and we're confirming that again today, and also not dropping back below the 50-day moving average, which I also think is pretty important at this point. So I think we should have some nice days of trading ahead. Now, the big caveat to all this is the blasted fiscal cliff talks, and it's really disturbing me right now that neither side is really bringing a solution to this. And my thought is the market's going to react very negatively if this fiscal talks don't get resolved. I mean, obviously you're going to have a whole bunch of tax increases that go up across the board. You're going to have defense spending cut dramatically. Medicare is going to be taking like a 2 or 3% hit. So I mean, there's some significant cuts there, and it's going to affect a lot of companies. And so maybe the market's pricing in something we don't know at this point. I think there's a strong possibility that you'll see Republicans just basically say, hey, we're going to let Obama have whatever he wants on this and let him own it and let him, take on whatever consequences that happens as a result. I think probably going off the fiscal cliff is the least likely possibility at this point. But as every day approaches, though, I mean, I think it increases in probability that it could in fact happen. So market just really isn't showing much fear by it, though, at this point. I mean, we're up 4 straight days, and I don't know, we're less than 30 days out, and the market's just not giving them too much of a care to it. So outside of the fundamental news that is driving this, that could drive this market in the future, namely being the fiscal cliff talks, outside of that, technically speaking, the market looks pretty darn good. Steadily moving higher. Volume isn't all that great, but that hasn't been great for over a year now. So we also are starting to creep back into overbought conditions, but nothing significant. Let's go ahead and look at the first stock here. Chris in our chat room, he was asking me to give a good look at Garmin, so that's what I plan on doing here. Nice 3-day consolidation just above the 200-day moving average. It is creeping outside, or it was trading outside the upper Bollinger Band. I think it's good from a long perspective that it's getting back inside that band, because if you look at it over time, there's been a few times where it has traded nicely outside of the Bollinger Band, namely when it popped out here back in August and then just sort of marched higher. But it's never really traded extensively outside of the Bollinger Band. You can see right here on an intraday basis, once again here back in May, once again here in February. So this isn't a stock that you want to really be aggressive with once it's trading outside that Bollinger Band. So at this point, I would probably wait to see if it can get a few more days of consolidation, because if it pops here, it's going to be right back outside that upper BB, and I don't know if that's really a place that you want to be at with a stock like Garmin, which doesn't have any solid track record of doing good outside of it, and you have a huge gap that needs to be filled. So one would surmise that at some point, whether it be in the near term or the long term, it's going to come back and fill this gap, and that's quite a large gap to leave unfilled. So I think you have a couple of negatives going along with this stock. I mean, I'd say the only positive is that it's holding that 200-day nicely, and it's consolidating nicely over the last 3 days. But at some point, it's either going to break, below 4160 or break above 4207, and at that point, you could see a move in either direction. But to the upside, I think there's a lot of headwinds. You also have resistance at 4240 just from previous price resistance, and I'll show you that here. So you got resistance there, so even if it does break above this channel, you're going to have some testing going on right here, and that testing at resistance is going to occur outside of the upper Bollinger Band. So I'm not a huge fan of that. I would say if you're desperate for an entry on this position, it's never good to trade desperately, I guess, but assuming as much, this 8-day EMA might be a good point to try to stage an entry on, but I give it a few days, maybe even a week, and just come back to it and see what kind of picture it has at that point. But I wouldn't trade it right now. CODE, these were a couple of stocks that wife mentioned were performing well. She actually mentioned them on Friday, but you can see they're breaking out very nicely. Kudos to her for finding these setups. Another one here, MNST, breaking out on Friday and pretty much holding its own today. All right, I actually placed a trade today. I did a post on it that pretty much explained everything, so I won't, repeat myself too much on it. But LULU is trading much like VRX, and you can see here VRX had a long-term bullish flag pattern here, and it broke out and traded just terrific. LULU is the same way, and I'm hoping that we can get a similar price action out of this here. It's not up against upper Bollinger Bands or anything, so it does have some room to run. Should this thing play out like I think it can, I wouldn't be surprised to see it go as high as 77.81 or so. And let's see here. Let's look at the next trade here. And my stop too, by the way, on LULU is just a shade below this little area here. And how I came up with this 70.60, how I came up with that stop loss. Essentially, I look at, okay, where would a price have to get? What kind of candle, would it have to go down to at what price level for me to get bearish on the stock, or for me not to like this stock anymore from a set up long? And I decided 70.60 would be that price level. TM. One thing about Toyota stock, man, this thing gaps all over the place. And the action of late isn't all that bad. You got a little bit of price resistance here at, I don't know, what is that? 87.11. So you don't have a whole lot of room until it's going to be testing some significant highs there. Not all-time highs, but recent highs. But on the positive side, you have a nice little triangular pattern that is working in your favor, like a continuation pattern. So that I would deem bullish. You could also draw it and say it's a bull flag. It doesn't really matter. Like so. Let me draw that a little bit better. Okay, so you could have a bullish pattern, continuation triangle. Either way, it doesn't matter. It's the same. It's showing us the same message that it's consolidating at the highs and it's looking to go higher. The only thing you have to be careful of is whether or not this recent high here at 87ish is going to stymie that breakout. So that's something to keep in mind. I would say your entry level on this particular trade would be at 86.08, so it's not that far away. And I wouldn't get in any higher than 86.17 or 86.15 or so. Oh, and here's one thing I didn't look at, but I won't trade it because of this. But the volume is not that great. So today it's only at 97,000. Friday the volume level was at 252,000. So not a ton of volume. Sometimes I'll trade these, but when it's a stock like this that just gaps all over the place, that scares me a little bit on that kind of light volume, which is in large part what's driving a lot of this gappiness in the stock. My stop loss on this stock would probably be, I think you could take like an 84.91 stop loss, 84.85 maybe, which gives you a pretty good risk to reward if this thing can break out above previous resistance and move higher. Let's look at SSYS. So this stock, it broke out above what I would probably call once again another like a bullish flag looking pattern. Actually no, I would probably call this more of an inverse head and shoulders pattern. You have a left shoulder there, head, right shoulder. It's very sloppy, but it is there, and it broke above it at around 67.19. It goes as high as 80, which is huge. I think the play is done and over with in this stock. I wouldn't go chasing it. Had it broken out here and maybe consolidated, yeah, that would be a great stock to try to play the breakout on. But it's come back, it's bounced off of this here, and even if it was to come back to this resistance level again, the bounce isn't going to be the same. So I would stay away from SSYS. I don't see anything really compelling to get long on that one, nor short. I don't see anything short either. So CERN. This is a stock that I traded a long time ago that actually did me pretty good. Initially, I want to say you got like a left shoulder head, right shoulder IH&S pattern, but I don't know. I think that might be stretching it a little bit to say that's what you got. Coming off of these highs from back in June, gives you a little bit of resistance. I don't know if it's if current price action is really that favorable to push it above that level. You have a lot of support at the 50-day moving average. If I'm guessing, I would not be surprised if what drew you to this stock is probably has something more to do with this price action consolidation of late here, and yes, it is trying to break above it, but once again you have this resistance level right overhead. Once it breaks out, it's going to be outside of the upper Bollinger Band trying to push through resistance, so I'd probably stay away from this one as well. Let's look at L. You have a pretty good long-term trend line in this stock. Let's just draw it from here. There you go. You have it. It's bounced off it on multiple occasions. Here, and then it dipped below it, but then recovered nicely. But it's still sort of an eyesore to trade long off of. You have some resistance at the 50-day moving average, and this looks more and more like a bear flag to me, quite honestly. So I don't think I'd want to get long on this stock either. I think it's more likely, considering how steep this sell-off was off of the highs. I think that the likelihood of where the stock ultimately goes is probably to the short side. I don't see a clear enough of an edge to take that trade, but I definitely don't see any edge on the long side either. SRCL. initial thoughts on this one is that we're basically seeing a lot of sideways consolidation in this stock. It's basically been going on since July. It had one breakout attempt. It failed to do so. It's currently trying to break out of it again. It's run from $90 to $95, over the past month. So it's not a crazy run by any means in the stock, but it's about a 5% increase, but it's been a very steady increase. How I would trade this is you're going to probably want to get in somewhere, I don't know, between 95.15 where it's currently trading at and the breakout level, which is 94.77. And that's not really a big range, but that's where I would try to get in at. I don't think it's bad to get in at this point, but if you're going to trade this stock, put your stop loss right below this 8-day EMA. So that's a trailing stop loss opportunity. You can see it's had a lot of support on the ride up. Put it a few cents below it, I guess. So we could say something like 93.50. The EMA is currently at 93.96. So use like a 50-cent stop below the current 8-day EMA level. And I think you could have something that could run on you. It's broken out before and didn't do too well after it broke out. So be cognizant of that. But I think if you're using that stop loss like I told you, you should be all right on that one. ATML. Looks pretty good. Let's see if there's any resistance that we need to be aware of. I don't see any yet. In fact, I see this resistance level here. And then again here, which is providing some support for this stock. So at it's a low dollar stock, so you need to be wary of that. 532. I'm not really crazy about the stop loss. This may be another trade that you might just want to go off of the 8-day EMA and put your stop like a couple of cents below it. So 539, you got about a 4%, a little less than a 4% stop loss on this trade. Targets, I would be looking at 626 or so. You have some resistance here, 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 and over in here. So I think it's a decent setup. I wish we could have gotten in on it a little bit earlier today when it was breaking out of this bull flag here. That would have been the ideal time to get in around 549. You could have kept risk fairly tight by doing so. All right, let's look at the last one here. ROST. Whoops. ROST. And you have a pretty hard downtrend on this stock. I'm not seeing anything I can really play with yet, but let's throw some lines on here, Bob Ross style, and see what kind of picture it gives us. All right, so you have some resistance here at this 57.80 level, which is probably the prime place that you want to target as an entry into this stock. ROST, it's actually been a really good trade over the past, couple of years. I mean, you could see incredible long-term uptrend, and it's just since September it's really started to break down, and I think eventually it's going to find some buyers, particularly if this economy goes to crap over everything that's going on in this world. But people will be more likely to shop at ROST. You have somewhat of a cup and handle pattern that may be forming there. I wouldn't say it's a textbook one, but it's a kind of sort of one. But 57.80 would be my ideal long entry into the stock, and I'd probably, knowing what I know right now, put my stop loss at like 54.75. So those are the charts for today. If you guys have any questions, feel free to hit me up. Email Ryan at SharePlanner, or come into our chat room. That's the best place to get my attention. At shareplanner.com/splashzone. All right, folks, you have a great day and God bless.